Hi friends, let's take a look at Link together. Link versus the Bitcoins and Link versus the dollar coins. And Link has been very, very fan-dabby-dozy tasticals for us recently. Okay, we spoke about it in yesterday's video. Pardon me. Now, I want to say that I'm surprised that it came up here and did all of this in the space of a day and whatever else, but I can't say that because we spoke about it for one. So, it's hard to be surprised when you said about something happening in advance. We have this channel on the charts here. As you can see, I'll just bring it up here, big time, zoom on in so you can see, let's push it down a bit so you can see we had this channel on the charts. We talked about all this and we pointed at these numbers over here on the left and talked about them as well. So I want to say that it's a surprise, but of course it isn't. But it did feel, I still had that emotion going through me as I was looking at the prices going, wow, check it out. Done really well here with Link. Link is actually currently priced, by the way, $16.36 against the dollar and 142,793 against the Bitcoins. Over here, band is 117,214 and 1344. So it's somewhat cheaper than Link is at the minute by a matter of a few dollars. And that is actually as a result of the band prices dropping off. So now, why am I talking about this? You might be asking at all. Well, band is another Oracle protocol. And what you have on the go here is potentially going to come in with an Adam and Eve type top or whatever you want to talk about. Who cares? And around this area, below the 236, suffering at the minute, actually moving below the 21 EMA, various things on the go to say that this could obviously have been crap on the run up to it. It could have had this happen with the bearish divergence. We pointed all this out in the episode the other day anyhow, told people to look out for this as a sort of precursor perhaps for enthusiasm being sort of eroded off of the Link pricing. But it's good to see that the Link has actually moved to retake its place because it should be worth more, it's used more, it has more value to it, it should be valued higher than the band protocol. But what do we have here? As you can see with my scattered brains drawings on the chart, that what we've been talking about is quite clear, that we haven't managed to push up enough in terms of moving past these zones and price action wise to on average over the period of the last 14 periods and that to push past this this zone without the divergence. Okay, so we have some bearish divergence on the go, as you can see in the RSI here between this high over here and then all of the highs thereafter, you could say, but most significantly coming in here at the 1758 area. So we have that on the go. Is that a big deal necessarily? Well, jumping back over the Bitcoin prices to kind of cover this point off. My voice just kind of went weird. Is that better? Right, good. Then you're looking towards the median line here, 139k, the 236, obviously 132, and then over towards, if we were to slink down past it, where could we see our foots being founded at in terms of getting a foothold? Would be the 21 EMA in there, 125k, or indeed the lower end of this parallel channel at whatever point that comes along at, or indeed thereafter. You're looking for three targets, the 382, which is because I've just rearranged this Fibonacci towards the downside, would be in there as 118,000, 108,000, and then 100,000, 95 to 100,000 in terms of the three targets, 382, 50%, and the golden pocket thereafter. And over here on the USD prices, same setup, by the way, if looking at the divergences and whatnot, same sort of setup. Then you can we just do this a little bit easier for me so I don't have, can we allow me to do that? Yes, I think we can. I'll first off take my Fibonacci from before. I've stretched this out so much that I have to go looking for the right hand side of it, so excuse me, but take this up here to current price action, zoom on in. Is that close enough? Yeah, cool. Let's see then. That the 236 on this one actually comes back in where the parallel channel is. So we were going to make this one easy on ourselves and it's done it for us. 236 comes in here around about this parallel channel that we saw in the past, which the prices were in for, not a super long amount of time, but it's just, in terms of this zone moving up the way, that's kind of interesting that it wraps in around that zone. If we were to come back down here over the period of the next handful of days, looking over towards the 23rd of August, if $13.50 was taken out, I'd look for movements towards the downside. But actually, we can stay relatively calm about this price action in terms of its upward price movements. Let me just make it full screen here and look at it from a better perspective. We can stay relatively calm about this with a smaller time, to manage it tighter. Managing it tighter taking a line from here up towards the top end and managing it a bit tighter and saying, yeah, okay, let's just stay cool about this until as long as we're above $15.15 or so. And what is that kind of tying in around about? Well, the two price target, that we talked about in the recent past there at that 15.50 and 16.81. Now, of course, everything's gone wild, like we spoke about. If things go wild, where could they go to? And they've reached all of our targets for the upside recently. That's very, very good. And it's come in with a touch of the divergence, perhaps across the board. So I would look out for things. But if we move on beyond these zones as well, where could we be looking to? And of course, we're talking about blue sky thinking at the minute. Of course, there's nothing historically over here to kind of give us any clues, perhaps, as to where the next sort of prices could be coming in at. As you can see here, we've gone past both of these 4, 2, 3, 6s, all three of them, for the way that I've got there's basically the same Fibonacci retracement, just repeated more or less. And we've come up and we've done that. So what do we want to look at next? Well, there's various things we could look at, one of which being the round dollar number of like $20, and another one being, if we were to just sort of try and encapsulate this price action in another way, perhaps looking at this with these upwards. Looking at this in terms of this is parabolical to the point where you want to watch out for movements up, because of course they can come down with harder crashes, obviously, as a result. But of course, then as well, does this necessarily just have to stop? Well, no, it doesn't. And a big function of the fact of this going up is, of course, the fact that there is just no supply, which means that when you get these sort of divergent thing happening, then that can be the case. Now, when a lack of supply in terms of a trend in market and looking at things like how this is actually calculated in terms of the RSI, and where you need to look at this, all of these are inhibited by the fact that that the calculation for it is smoothed off by the average of the previous 14 candles, which means you need to see kind of movements beyond, just as a simple way of looking at it, beyond the highs and the lows of the previous, of the other candles, so that you can get a sort of standard deviation move beyond that. And that's hard to do consistently all the time without some sort of degree of a pullback along the way anyway. But for us to see that, then I suppose maybe $20 would need to be actually happening. Somebody was asking me for what would you say then as a result? Well, $20 would be where you could then say, hey, look, and then we just come back up here and we put it in without any of that divergence. Now, divergence necessarily a big deal, not necessarily. What does it mean? Well, it means that it depends on how the calculation for what you're forming is done. It means that the distance, for instance, over here on the positive and negative, the distances between these have decreased over time. We had bigger candles and now we're getting smaller candles essentially. And on the run up to this, because every time, there's another thing I want to talk about recently, was how people talk about where you would compare the highs to based on the period that you're using to look back the way. And while that's a totally valid thing to do, and I've spoken about it numerous times on the channel myself, it is also worth pointing out the fact that all of these peaks come in with the implicit and intrinsic calculation of the period running up to that high. And that what you're looking at when you're looking between the tops, even if it extends beyond 14 periods back the way, for instance, or beyond whatever back the way, you're looking at how it got to that point versus how you got to the point where you're at now, and whether there's a difference between that. Therefore, is there something else to be read into that? So the 14 periods leading up towards this price action here on the 4-hour time frame, the 14 periods 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, these have actually included the differences between the highs and the low, the average in terms of RSI, so the average gain in price versus the average loss in price divided by those things, is actually different compared to the 14 periods running up to this high. So looking at this one, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So like the average gain over this period was actually bigger than the average gain during this period of 14 candles relative to the average loss. The difference between those two in the 14 candles looking back the way, partly because of this dip down here, which was bigger than the dip down here before we got the party started. And then you're looking at the average gains, versus the previous, In fact, have I got a video up here talking about it? Yeah, in fact, where we have here talking about that somebody's working out on Excel. So like, the average upward movement, average downward movement, looking back over 14 days. This is the smoothing factor that we're talking about as well there. It means that you're looking back at the previous 14 days and taking their average upward movement and putting a figure for it and the average downward movement. Then you divide this by this to come up with this number. So the division of the upward movement versus divided by the downward movement in this period of price action is actually resulted in a lower number than if you were to take the average upward movement and divide it by the average downward movement during this period of price action. Okay. Overly complicated, I know. And how does that divergence necessarily work out? Well, that's why it's kind of worth looking at and thinking, well, hey, it is there. I'm going to remain bullish on this, despite the fact that it's there and we've come up to oversold zones and that we've had a sort of a swing pattern failure on this. Can remain bullish on this if we see the prices then continue to go towards top side, up towards that 20 area, because that might change the calculation enough in terms of the movement up there to get there to throw off the divergence for one. The other one could be that simply just moving beyond those key areas, gives you that ability to pull back and find support where we are currently, so you still be in a more of a profitable position, and various things like that. As I'm looking at this just live, as I was looking there, it distracted me. This is flicking between being positive and negative. The slope on this, is this running out? What we're doing here is just, 21 minutes left on this one. So as you can see, the RSI calculation, because this paint's live and whatever else, it's just changing. Are we going to see this be positive and cross over here and move towards the top side, or find support, find support on this here and move towards the top side right now, or will these cross and actually this turn out to be purple? Now this was flicking purple a second ago. If this were to close off purple and that then move down the way, I'd be more enthusiastic about saying it's changing than if it does it. If it doesn't, I don't know, it depends. It depends on how you look at it. Just like how here it got blue just there as it crossed rather than immediately after it. Or immediately just there. Actually, all the blue ones. It kind of that. Forget that section of things. This is just me kind of stream of consciousness ad-libbing, talking about something that I think about at the back of my head. Forget it. I'll not edit it out. I'll just say forget it. But should we see this cross towards the downside and it turn purple and whatever else, then maybe we're looking down the way. Maybe we'll be breaking past certain areas of sort of support and all that along the way. If that were to happen. See, it's purple at the minute. See, it's purple. It's just changed. It changed back again. It's changed back again. Great. So you can see it's purple. Zooming on, right on in there. So you can see it. So, this is changing to the purple right now. It's crossing over. It's kind of preempting that for us slightly, whereas sometimes that doesn't necessarily happen, or it just flicks straight back again. So we can see how this operates over the period of the next 4 hours. Will it flick back around again, giving this an opportunity to reset slightly, considering that it's hard to keep on kind of making assessments about the upward movement during trending markets, or will we see more like this, what just changed to there now, and it become slope down harder with this turnover? Something for you to look at for yourself, I suppose, there, in terms of just trying to pass off some sort of experience for people, to give you something to work with. ADX crossed over the DM positive, which is moving towards the downside in and around that 40 area. I'd like to see this cross back again, obviously, and if it doesn't and it crosses down the way, well, you see, it never got negative here. You'd have to look and see if we're going to find out if we're going to put in a low, will it happen with these crossing at the same sort of time as it has done in our previous couple of lows before rejecting that and moving, springing back away again, or will it continue down the way? So that's something else to look out for in terms of the early calling of changing markets. I'm going to spend any more time on this coin right now? Probably not. What can I say? We're going upwards so far. It's an uptrend. Everything's good. Would I be taking profits along the way? Of course, I have spoken about that a bunch of times over the past. Got these drawings on here. We already know certain things, like if we see the prices drop below 1536, then we'll have to ask questions. How will that be happening? Well, if we see these things I've just been speaking about there now pan out with the sort of the bullish reaction where they separate away again and move towards the top side, then that could all be good. Could just be giving it a sort of breathe in, that, you know, the respiratory nature of these things, or indeed it could be that we look towards them and see that it continues to go on the way thereafter, in which case we could look towards 13, 12 and $10 in terms of targets towards the downside. But I wouldn't necessarily get too carried away with that until, you know, for instance, you've actually closed below the $13.70 region, given that our first initial area to be aware of is going to be up there at 15 like we spoke about. I think that kicks out a whole episode full circle. I think there's a lot of good stuff in there for people, and currently our sort of top side target in terms of the Bitcoin pairing is going to be up there at that 155,000 Satoshi level. Yeah, moving up there, and movements beyond that, of course, could take you. I'm tired now. I'm going to give up on this one. I mean, I'm pretty damn sure there's plenty of value in here. There's areas of this which aren't actually overextended. If you look or divergent, by the way, in terms of this high, like for instance, the MACD isn't actually divergent, but the other ones all are, you know, as it stands. But that's not necessarily a big deal, and not everybody uses the DMI for divergence and all that anyway, you know, even at that necessarily. But yeah, I'll be checking in with whatever. I'll be checking in with all this again, of course, tomorrow, as ever, with these episodes. Today is Thursday. If you like what you're seeing and getting any value from it, hit that subscribe button. Yeah. See, it's 15 minutes left on this one. I can't let the episode drag on that long or actually see how that all pans out or anything, but it's not even the biggest be all and end all. Just looking at the horizontals on this or whatever. Managing the risk in around this zone is going to have to do it, and I can't really be bothered coming up with any big outlandish profit targets. I've already done that a whole bunch on the run up towards these zones. We've got them all and everything else. We've done really, really, really well. Don't need to keep doing it. But of course, you could very easily look towards the 3618 at 194,000 and the 4236 up there at 217,000. And a quick reminder to folk, we've seen the 4236s operate in terms of, you know, targets for us in the recent past in the dollar pairing. So to think that these things are so outlandishly far away that it would be unachievable would be premature to say that. Although we did have more sort of, the Fibonacci's were different over here for us to work off of, obviously. Oh yeah, cool. Okay, I've lost the plot now. I think there's a lot of really good content in this one, but it's hard for me to remember off the top of my head. I'm just pretty confident there's a lot of good value in here for people. Good luck with all your trading out there. I'll catch you in the next episode. And I'm giving out a shout out to Tony. So Tony Lawson, you decided to become a member. Really do appreciate it. You get a shout out as part of being a part of it, and you've decided to send some value back my direction. I really do appreciate it. So I'm giving you a shout out in each of the episodes today. Catch you next time. I'm moving on to the next episode. Oh, did I say? Yeah, it's a bull trend, blah, blah, blah. Yeah, I said everything. There's an element of head and shoulders-iness, I suppose, in terms of the RSI to look out for. And you could draw a neckline in there, I suppose, around about kind of sloping up the way in this one. If you were to do it, if you wanted to be sort of negative about it, or managing your risk from a sort of negative point of view, what would it be in around this zone? If you were to look for that, I suppose I've done enough. There's plenty of stuff you can do in your own time. Great, cool, nice one. Catch you later. Gonna go and move on to Tezos. Thanks so much. Good stuff.